The first jobs report since the government shutdown is now out. The Bureau of Labor Statistics released the numbers today, and they seem to be better than expected. Employers across the nation added 119,000 jobs in September, but we should note unemployment rose slightly. CBS News Money Watch correspondent Kelly O'Grady is live at the New York Stock Exchange for us today. Kelly, good to see you again. Let's just look at the report here, because I want to know what you made of it, what stood out to you, and also how that will affect the Federal Reserve once they figure out what to do come next month with the interest rate.
Yeah, everyone wanting a lower interest rate is wondering that same thing. So what stood out to me, 4.4% unemployment, it ticked up. It's still within the healthy band, but that is the highest that we've seen since October 2021. So that tells you, we are ticking up there. That's something to watch. 119,000 jobs added. That was significantly more than expected. We were looking at 50,000. It's also a huge turnaround from August where we lost jobs.
Oh, yeah.
So that is good. I think where the concern, though, is that this is a backward-looking report. This is September. It's old data. We're not going to get October. And we also know from the Challenger report, the layoff report, October was the worst month for layoffs in quite some time. So anecdotally, we know that the labor market is weakening. What is the Fed going to do with this? They're going to look at September. They're going to look at the lack of data they have and likely say, we could wait and see in terms of that next interest rate cut. I was just looking at the odds right now. It's a coin flip. The market is pricing in a 56% chance of a cut. So it's kind of one or the other right now.
Oh, all right, Kelly. So we actually talked about this yesterday, the possibility or the concern about an AI bubble. But then the CEO of Nvidia, he is shutting those concerns down after his company's strong quarterly earnings. What can you tell us about Nvidia's latest gains?
So, record revenue in the third quarter, $57 billion. Then they upped their fourth quarter estimate to $65 billion. It was a great report. They said that the demand for their AI chips is off the charts. What does that tell you? AI spending is alive and well. That, though, is why there is concern about the bubble, because if those companies are spending, they're buying NVIDIA chips, amazing for NVIDIA, but if they're not making a profit, that's going to be a problem in terms of these really high valuations if that spending does not come to fruition. We saw a huge gain in the market when it opened this morning. I'm looking, though, we're now in the red. It was actually almost 1,000-point swing, right? Between 900 and 1,000. What that tells you is investors were excited about NVIDIA, but there is still this concern of a bubble. They want to make sure that they're putting their money in really value plays versus getting caught up in that AI hype.
Yeah, and Kelly, for those watching and thinking to themselves, okay, what are they talking about? AI bubble. What does that mean, and what could that look like?
So the AI bubble, essentially, go back to the .com, where you had all of these companies, these startups, anyone that was doing anything online. You saw investors put so much money into those stocks because there was the hype, the excitement of what could be. But when you have hype with no real fundamentals, with no real profit, that's when you could see a bubble burst. And so you see these sky-high valuations in terms of a stock price or perhaps money raised by that company, but then it ends up going away because the company had hopes in this case AI, that it was going to really drive their company forward, but then they spent a bunch and then they just didn't turn a profit. So right now we're in that phase of all of these companies doing all of these amazing things, hopefully, but then they need to figure out how to make money on that.
All right, we shall wait and see. Kelly O'Grady at the New York Stock Exchange for us today. As always, thank you so much.